shades of green in some part of the market today, and you could say that there is some amount of attempt of buying or trading on the long side, which is happening. OMCs is one area on expectations of price hike for fuel. Gas stocks is also one area. So the exhibition counters are gaining in trade, thinking that people will forget about markets and go and watch movies perhaps. But yeah, there was first half of the session, the market was not all bad collapse. But then the last half an hour, again, melting has started at the peaks of Nifty and Sensex. So we are clearly in a bear grip right now, and we have to negotiate that. IT index is doing phenomenally well, trading at days high, understandably so. By the way, if you look at the 10-gram gold prices have crossed 54,000. So there is clearly risk aversion at play, and safe haven buying is taking traders towards gold as far as trading is concerned. But we'll discuss all of that with Aashish Somaiyaa, who is joining us now. Of course, he is the CEO of White Oak and a market veteran. Ashish, good afternoon.
Good afternoon.
Ashish, I know that you like to do off-roading in your new Thar, I know. And, you know, one is getting the same feeling. The traders are getting the same feeling when you go in the, the terrain of Lonavala and Khandala in your Thar. The same kind of massive wobbly feeling is happening to all traders right now. But you have seen markets long enough. You can share some perspective from history that these war-torn, environment and markets, how to negotiate and, kind of navigate through this kind of volatile times.
Sure. So thank you for having me, Ajay. I think, since you gave an example of off-roading, the only thing different is that there we are taught that, you first walk the obstacles, you do a whole survey of the terrain, and only then you get into your car. So, you try to mitigate the unexpected, ups and downs out there. In the market, unfortunately, there is no equivalent. So like you rightly pointed out, we can only try to learn or, hopefully draw some parallels. But all said and done, let's also be truthful that, events like demonetization or events like COVID or now, one in the 21st century, a nuclear power trying to, capture some territory of a independent nation. I think some of these are unprecedented things. But on your question, 2 or 3 things I can still attempt to share based on what I can glean of the situation. One is, not to make any deterministic kind of bets. So for example, if you see last to last Thursday, the Nifty was down more than 4%, mid cap and small cap indices are 5 to 6% down. And next morning, which is Friday, last to last Friday, everything was 3-4% up. So if somebody had thought it, okay, this is over, they would have been actually in significant trouble at this point in time. So one of the things is that not to make any deterministic bets, let the facts emerge. Of course, day by day, market is getting cheaper and cheaper. Other than oil, and definitely oil's impact on our GDP, which also, by the way, plays out only if oil continues at this level for a very, very long time. If it really turns out to be transient, then we'll look back to realize that these were really, really cheap valuations. So not to make deterministic bets on either side. While the market is getting cheaper and one hopes that this is transient, one should not make deterministic bets at this point in time or try to call any level of the market really. We should let facts emerge, and we should at least try to get some glimmer of certainty as to how long drawn this is going to be. Right now, that doesn't seem to be the case. Second thing to keep in mind is that this is not like the financial crisis and it's not like COVID, which means that it's not something, which has, this is actually different, because in this, what will happen is at some point in time, if there is any such news flow, which tells us that, there is some compromise or there is some kind of back off from either side, then suddenly, oil and commodity can drop and equity markets can kind of turn, and, flows which are globally risk off can suddenly become, positive. So I think that it doesn't sound great, but for an existing investor who's already fully invested in the market, right now, other than to do nothing, there don't seem to be too many viable options.
Ashish, what probability would you assign? You must have also read data points, looked at history, looked at valuations in the last 30 years, the zones where we have rebound from. Because as you just said that at one point in time, the market falls under its own weight because of steep valuations and other things are just triggers, markets may also make a case for bargain hunting because it gets too cheap. But what is the message you are giving out or the data points you are communicating with your clients at this juncture?
No, it's frankly absolutely exactly what I said. There are many times. See, everybody looks up. Human minds basically want certainty, and human minds want to be able to call something as black or white, right or wrong. But unfortunately, the stock market doesn't always. Actually, the stock market never provides such a clear landscape for us to be able to say good or bad, black or white. Right? It's a situation right now where we want some certainty to play out. We want some events to play out. And till then, it would be very, very difficult to call any direction. Also, we would not necessarily be knowing clearly as to how far we are from the bottom. We obviously know how far we are from the top, and that's been quite a significant decline already, given what our local conditions are. Given also the fact that we are not directly involved with this whole geopolitical crisis, other than the fallout of oil. And oil also, like I said, it's a question of how long drawn this is. If it is not very long drawn, because see, one of the case which everybody is making is that there will be like a big shortage of supply, but none of the Western countries, not even India, not even China, nobody's saying that they will not buy oil from Russia. Plus, there are other things at play. So the point to keep in mind is that it's quite likely that this may not be as severe or as long drawn as what it suggests. It always feels dark when the market is falling, but these kind of things which are happening right now are quite prone to a sudden U-turn. It's only waiting for a couple of news bites for that to happen. So it's better, I know I'm not giving certain or deterministic answers, but I don't think that's the scenario right now. So we should just, wait and watch. I think that would be ideal.
Aashish, if you had cash levels, if you are maintaining some opportunistic cash levels, what are the areas you would start to nibble at, things which have gotten extremely attractive with this fall in the market or areas of the market?
Sure. So two things to keep in mind. Like one would be like, I was still now answering more from the existing investors' perspective, because clearly the stock of money which is invested is far bigger than the flow that materializes at any point in time. But obviously, on your flow question, if I had money, I would actually spread it out over the next, say, 2 to 3 months, definitely. Second is that in terms of, while we ourselves are not a sector-specific investor, but keeping in mind your question, I would say financials is the place. Because, generally when there is a risk of financials intrinsically are leveraged, generally there is a risk of they definitely get the short end of the stick. And then when the prices start falling, then the backstories kind of come that, oh, no, because MSMEs are there, because there are supply constraints, etc., etc. But I think that despite better and better performance over the last 9 to 12 months, so much of FPI outflow and so much of selling in the market, I think if you put all of that together, I would say that, the large private sector banks, financials, they seem to have taken the short end of the stick. And I think they are the ones where, one should focus on.
What about elections as one of the small factors in overall sentiment? The exit polls, you must have gone through them. If the actual announcement on 10th also comes broadly in line with what exit poll threw up, do you see any scope for reaction, or you think the markets are so compressed? And what if market is disappointing, the actual is very different or just the opposite of exit polls? How do you see that as a short to medium term factor?
So there, unfortunately, there is no win-win situation. If you really ask me from whatever I understand, I'll tell you the reason. The reason is because if the results come in line with the exit polls, then it will be taken for granted. But if there is any disappointment there, then that would add to the miseries of the market. So no easy answer on that one. If there is a disappointment, it is a disappointment. But if it is in line with what is being shown right now, then I think it will be taken for granted. So the bigger thing, it's the bigger picture right now. It is the geopolitics right now, which might actually override what is happening locally.
Out of your PMS, which is ever growing, and of course you're setting up a fund, and over that the parent company also manages overseas money. I just want a dipstick view of the investor community sentiment. be it the overseas guys, be it the big HNIs in your PMS. What is the sentiment right now among various categories of investors you've been speaking with, say, in the last 1 month?
So I can say that, when we speak, when you talk about, say, global investors investing specifically into India, for our listeners, and I'm sure all the market participants are aware about this, but since some of the listeners may not have got a nuanced view on this, I'd just like to clarify that when you look at global investors, there are few which are India dedicated or India specific investors who have an India dedicated allocation, and they are, they may be investing from various parts of the world, but they're specifically reaching out to guys like us because they want an India dedicated manager or an India dedicated allocation. There are few of such guys, but then there is also a large base of participants which are, global equity investors, Asian equity investors, global emerging markets, maybe some hedge funds who are opportunistic. So for them, pretty much it's an open playground. So what I understand is that the guys who we deal with, which is India dedicated. So let's say from 1st January till now, which is when all this trouble has started. So if I see 1st January till now, we haven't seen actually any massive net negative flow. I would say we are actually, I can speak for ourselves, I would say we are seeing net positive flows. Of course, on the margins, everybody appreciates that when oil prices go up, then what is the net position for India? I'm sure people are a bit concerned about oil and its impact, but we haven't seen any big outflow really. If I talk specific to us, clearly in the market, if you see FPI flow is a big negative, and I think that gets explained by what I mentioned about risk off as far as some of the emerging markets are concerned, or a risk off as far as generally equities are concerned. Coming to domestic, I can say that if I were to look at February over January, the flows were higher. And even now, I think people who we deal with, the private bankers, wealth managers, and then, behind them, there are high net worth investors. They have been looking at all of this constructively. And everybody who we speak to, anybody who has the ability to allocate, is consistently spreading their investment. So February, March, and, I think over April and May, I think 3 to 4 months, people have been doing kind of bottom fishing, and people have been investing at every level. And even in the domestic, like I mentioned for the offshore, even in the domestic, we are actually witnessing net positive flows. And I'm sure, it doesn't need only me to say this. Even if you see the retail mutual fund flows, you can see that investors are taking advantage. And by and large, the belief seems to be that, in the next few weeks, probably, we are going to get out of this.
All right, Aashish, we'll let you go on that one. Thanks so much for your time today.
Thank you for having me. Thank you.
Great. That was Aashish Somaiyaa, an old-time contributor of ET Now. Time for a short break. On the